And welcome once again to Investor's Edge. I'm Gary Culp. I'm your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It is Friday. It is September 5th, 2025. Hope you have a good day. Hope you're all going to have a good weekend. As always, lots to cover. And sometimes our lots to cover is based on the emails we get. And today, we got quite the few on one subject, and we will get to it in a couple of minutes. In case you don't know, this is serious talk on everything that affects you. We'll do markets, the economy, your job, your industry, the job market, and everything else that matters. And if you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our X feed and the podcast apps in the Biz TV YouTube channel. And if you'd like to email me, just be nice. All you got to do is be nice. We'll be nice back. Well, so every now and then something perks up and we get a bunch of emails on one subject. And today was the job market. So I guess you all are watching things closely and watching the tube or listening to the radio that the jobs number came in pitifully, very poor. And it's not just this number. The trajectory has been slower and softer. And you already know this because we have been telling you it's been softer out there. To what extent? We're not sure. You never know. But I want to put a few things to you, and we're going to be blunt as usual and probably piss off some people because, you know, you got one side that loves this side and the other side that loves this side. And as we told you, we don't give a crap about sides. We give a crap about policy, and we give a crap about outcome. And I don't know why more people don't do what we do, and that is get away from the love and the personality. You know, I know we love our bands and certain actors and actresses and certain celebrities and certain restaurants and the type of food you like. You really shouldn't be loving leaders that have taken us to $37 trillion of debt and are guaranteeing $2 trillion in deficits every year going forward. You should be caring about policy. And it's okay to like some policies, love some policies, and hate other policies. But no, what we have, unfortunately, and not everybody, is just no matter what, we are going to take that person's side. And what we're just trying to tell you is, no, it should not be that way. So, jobs have been going south. And here's a few thoughts for you. Agree or disagree. Hey, it's our opinion. So, as you know, the president fired the woman who was running the Bureau of Labor Statistics person on the last jobs number was very weak and said the numbers were rigged. Well, the numbers were not rigged. That was a lie. That is a president being upset about a jobs number. I can tell you we loathe the president on something like that, but there's not much we can do about it. Another job, he replaced that woman with somebody else. Well, another jobs number came out, and before it came out, the White House actually made a statement about the way the numbers are being done, and they were making excuses, so already knew the jobs number would be poor. And it was. It was weak. Revisions have been weak also. The president has been out and trying to defend it. They had, what's his name, Kevin Hassett out. And I got to tell you, They got to stop wee-weeing down our back and telling us it's raining. Today he said the number was bad because of the Bureau of Labor Statistics. That's the new thing. Everybody's screwing them. Everybody's rigging the numbers. Everybody's trying to make them look bad. No, the job market is soft. And instead of blaming others, maybe, just maybe, they should look to themselves, and maybe some of the things they're doing are not very smart. Maybe. Just maybe. You see, we have been telling you that the tariffs were going to have a negative effect because they are tax hikes. And every time they come out and say, we collected $25 billion this month, brought in $25 billion. No, they did not bring in $25 billion. We paid taxes. And due to the fact the administration has said all along and promoted themselves on tax cuts, that tax cuts are good, tax hikes are bad, well, why are they hiking taxes? Interesting, huh? Think about that. So we've been telling you they're not good. Tax hikes will have a dampening effect on the economy. Of course, they're blaming Jay Powell for not lowering rates, but as we have told you, Jay Powell's maybe a half point behind at most. If he dropped a half point, it's not going to create a job. It would be a no big deal thing. So blame everybody else but yourself. And we're just letting you know it is our opinion that it is a lot of the tariffs doing the job, softening things up, having companies, businesses, big, small, medium. Why would I hire? I don't know what my expenses are going to be next week, next month, in a year from now. So I've got to take a step back. And yeah, maybe AI could be part of this. I don't think so, really, though. I think AI is going to create jobs. So the number was soft. I believe we're through some sort of a cycle at this point, but huge tax hikes have a dampening effect. And for all of you that love the man, maybe you want to message him and say to him, well, they railed against Kamala Harris wanting to raise taxes on everything. Why are you raising taxes on everything? And to be clear, that's exactly what they're doing. And then there's the other part of the tariffs. The other part. The constant changing of the numbers, the countries, and the products. Constant. When you have a moment, there are websites that actually have all the movements. It's almost insanity. And it's not just trade. It's because he likes or dislikes. Brazil, 50% because they're mean to the ex-president. That's insanity. India, because they're buying oil from somebody he doesn't like. It's insanity. And when he puts a tariff on, he's putting a tax on you. Well, wait a minute. I'm not paying. It's the company. Maybe the consumer gets passed on to it. Oh, it's all of us because of the dampening effect of the economy. We have said to you on this show, under no uncertain terms, we hope we're wrong. We want to be wrong. We said to you the other day, we'd love to be a year from now out. They collected, $250 billion in tariffs, and we're growing 3.5%, and we're 200,000 jobs being created every month. We'd love that. I'll be glad to come out on this show and say to you, I was wrong. But the history of big tax hikes It's a dampening effect. And by the way, this is inclusive on the maniacal $2 trillion deficits that this president's now going to run and had a chance to do something about. So there's my answer to all the emails. And it was a rough day for some things, but not such a rough day for others. We'll explain up next on this, the one and only Investor's Edge. And welcome once again to Investor's Edge. So before we get into the numbers, let's narrow it down. Let's narrow it down. You're a business that is not a gargantuan business, not a mega cap business, but you're a business that does $25 million a year. And what do? Let me pick out one product company. You sell snow globes. Snow globes. And these snow globes are not made in the United States. Nobody makes snow globes in the United States. By the way, we're making that part up. I don't know. We're just giving you an example. So I have to get my snow globes from Norway. And I've been paying for each snow globe $10. And then I have to pay for shipping, insurance, people to unpack. And my total cost is $15. And I sell those snow globes, how about $22? Actually, I doubt snow globes are $22, but we're doing this as an example. Well, what happens if there's a 25% tariff? Well, the company that buys these things for $10 now buys them for $10 and then sends $2.50 to our treasury as a tax on each snow globe. What does that do to that business? Well, you may buy less. You may have to get rid of a few people because you're not making as much money. You're going to try and figure out how to make them here so you don't have to pay the tariffs, but that always takes time, right? You're going to try and talk to your supplier. Hey, will you do us a favor? Can you eat a buck of that? And that supplier may or may not say okay. And then what happens, just for the sake of whatever, the president gets mad at the King of Norway and now says 50% tariffs. Well, all of a sudden you are paying $5 each snow globe. Why would you stay in business if you're not really making any money? But then the president changes his mind 3 weeks later and goes back to 25. Please, Mr. President, stop. Can you just tell me what the number is? And then he goes down to 10. Oh, thank you, Mr. President. Oh, then he goes back up to 25. There's my example for you. And that is a fair assessment about what's been going on since April. Oh, but Gary, the market's been going up. Terrific. You know why? Because America is fantastic. Everybody's working hard to do well for themselves and their families. Doesn't the president get credit for that? Well, as my father always said, who's ever running the show gets the credit. So yeah, okay, the president gets the credit for that. Fine and dandy. But what about the job market? Because To be clear, if the job market continues to wane, the economy will continue to wane. If the economy continues to wane, consumer spending will wane. If that occurs, profits will wane, and then the economy can get into some trouble. We're not saying that's going to happen. We're just outlining things for you because just this week, just last night, the president said something about tariffs on semiconductors. And frankly, I thought that was already out there. So, I don't know what to tell you. That's the story. It's a fair assessment. I'm rooting for him. I'm going to try and get in touch with them and get a sit down with him, as I do believe I am one of the preeminent smart people on these tariffs. And he should be listening to me. And this whole thing about and this is what the president said, if they don't let me tariff the world, we're going to become a third world country. Now, we know that's a lie. It's hyperbole. We expect that from the lefty nuts. We don't want that from the Republican side. But that's what the president said this week. And I'm quoting him. And to be clear, that's sheer insanity. Yeah, third world country. In other words, again, don't wee down my back and tell me it's raining. We'll never be a third world country unless you tariff us to death. That's my take. And I am going to try to get a sit down with this administration. I don't know if it's the president or maybe I can get something with the Treasury Secretary. We'll see. And I'm serious about that because I have news for you. These are unforced errors. They're unforced errors. They're absolutely unforced errors. They are not a necessity in any way, shape, or form. And that's my big take. Now, the market made a very nice accounting of itself. Yeah, I'm going to tell you the Dow was down 220. Yeah, I'm going to tell you the banks were weak. But the market made a very good accounting for itself besides a few areas. Some retail was weak. Travel was weak. But up next, we'll talk to you about what wasn't weak. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. How about that for a big dissertation? And by the way, Walmart's been raising prices. Prices are going up in different things. And it may not show up in the inflation numbers because I believe real inflation comes from the central bank via Jay Powell. You know what he did. We'll keep you apprised. Anyway, so the banks were weak. Yields were way down. Why would the banks be weak? The only thing I can come up with is that if the long yields come down, the less they can lend at higher yields. That's what I think. Not 100% sure, but that's a good 1 + 1 = 2. Insurance stocks were down. Transports were mixed. But let me tell you the strength, because the 10-year yield dropped to 4.086 today, which is good news. And oil prices dropped over $1. Good news. Interest rate sensitive, the housing related. We've been telling you about that every single day. They were in a bear market until a few months ago, and once the interest rates started getting a little bit better, and once the thought of the Fed finally, well, they have been doing nothing but doing the opposite what it did for a good 6, 7, 8 months. So the housing related, and not just the home builders, but floor and decor, Pool Inc., Restoration Hardware, Home Depot, those types. What else did well? Well, you got to go back to earnings. Broadcom finished up 28 today, though it was up 50. So off the highs, but I don't see that as much of a big deal. It's a good move. And I guess they said something about how many. So the equipment makers that got hit so hard because Applied Materials, strong today. ASML up 28. They got upgraded. Applied Materials, the weakest of the rest, up 4.5 to 162. KLAC that got trashed, up 32 today. By the way, yesterday was up 34, so $66 in 2 days, about 7%. And Lam Research, Micron was up 7 today. Taiwan Semi up 8. So guess what the semiconductors did? Boom, shot back up above the 50-day moving average of import. So that was good off of Broadcom. You also had these electronic manufacturer, whatever, and that's because of something Broadcom said about what needs are and stuff. Celestica opened up $36 today to $257, finished only up 21, but still a good move. And then you had recent names that we told you were setting up well. Reddit, CRDO, and others all had a pretty good day today. And, I haven't mentioned these, and I probably should have. Hospital stocks. HCA breaks out to a new yearly high today. Tenet Healthcare, THC, new yearly high today. United Health not as strong. Universal Health, excuse me. So let's talk about the hospitals. You had some better action today in some economically sensitive. Wait a minute. If the job market's weak, how is economically sensitive? How is Home Depot? Interest rates coming down. They really are a defining force. Notice I'd even say, Jay Powell, the 10-year yield has been coming down nicely in the last few days. And you can bet your bottom dollar the Fed will be cutting rates, September 17th? And may I say, who knows, maybe a half. And markets love easy money. Markets love easy money. Unless we're in a protracted contraction, which we're not. We're in a slowdown. Now, GDP may be better than the job market, but government spending, do not forget that. This administration had one hell of a chance to do something about Biden and his ridiculous government spending, and this administration gave us that certain finger, and we have told you that before. And that is unfortunate also, but that doesn't surprise me as much. And yeah, it pisses me off, but I can't be that pissed off because it's expected. Politicians love big government because it helps out GDP. And that's something. There are not going to be any heroes. We'll go to 50 trillion and 60 trillion. When I'm dead, we'll be at 100 trillion. Where and when it blows up, I don't know. I would have thought it'd blow up at 20 trillion. I would have thought it would have blown up at 25 trillion, 30 trillion, 35 trillion. We're at 37, and we are going up fast. What did I tell you yesterday? Yeah, here it is. This is from August 25th. Over the last 48 days, the federal debt has surged $1 trillion or $21 billion per day. Yep. 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 But the market don't care. So even with the Dow down 220 today, I thought it was except for the banks. Gold, another strong day. Full-blown bullish phase in gold. And I said 2 days ago, probably going to pull back. It lasted a day. And why would gold go up today? Because as interest rates go down, the dollar gets weak. And as the dollar gets weak, gold goes up. And that was the story of today. But I want to repeat something. Considering the banks were crappy, considering that, the underbelly not bad, notwithstanding the few areas that were not that great. And that was the story. We're in quieter earnings season. September has not been so bad. I was impressed today by some stocks that were down big early that finished better by the end of the day. The growth arena looks okay. It was actually a pretty good day for the growth arena. And by the way, things were much worse early. Market opened hot. Much worse early. The Dow at one point today, 45,211, was down about 400. The NASDAQ at one time today, you ready for this? 21,534 was down 170, finished only down 7. So I'm definitely not a bear. And these growth names are really setting up well, and these housing-related names. Go look at Simple Pool today. Not a leader, but look at 2 days up off of 2 days down of the 10-year yield. Go look at Restoration Hardware. 2 days up from 2 days down of the 10-year yield. Go look at the XHB and the ITB. That's the housing related. Look at those two things up off of yields down. Simple story. Up next, what else we got for you? I'm Gary. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. Can we have a weak job market without recession contraction? Yeah. Not too weak. The consumer, they say, is like 70 some odd % of the economy. Guess what happens when people lose jobs with their spending? They tend to spend less. So that'll be something of note as we go forward. But I just want to make a point again of what we've told you. We don't have TDS. We have complimented him on many things, and we wish him well. and we want him to do great things, but by my own rules, higher taxes is not a good thing. Few other notes. Well, it's in real time. I am being told that possibly Eric Adams, the mayor of New York City, who's up for re-election, and there's all this worry about who's going to run New York City. And normally I wouldn't talk about a mayoral election, but it is New York City. Has an announcement to make. I guess he's going to make it sometime this afternoon. We're expecting the announcement to be he's going to drop out of the election in order to help somebody else win, and he supposedly cut some sort of deal with the administration on an ambassadorship or something like that in order to get out. When you have a chance, go look at that news. That's interesting. Let me be clear. You can't have a communist run New York City. And to be clear, not only is he a communist, he's a con artist. His whole campaign is a lie. He's now telling you all these things that he's not. His whole life has been based on certain principles, and all of a sudden he is dropping all those principles in advance of his campaign. Can't have that. Not in New York City. So I'm watching that very closely because, I repeat, it's New York City. Going into next week, there's just a slew of growth stocks setting up. And I am emboldened by the semiconductors as a whole getting back above the 50-day, and a very strong move today in something like a Micron, a Taiwan Semiconductor. Not saying we're buying them, but in order to go higher, as we have said to you, certain things have to happen. Number one is you got to get back above the 50-day moving average, and they did it well and with strength. Also, some of these contract manufacturers, I mentioned CLS, there are others, very, very strong. So, in spite of what happened today with banks, with MasterCard and Visa, the transports are still bleh, as well as some other areas. I think there's opportunity going into the end of the year. And I say this with Microsoft kind of breaking down. NVIDIA kind of breaking down. NVIDIA and the semiconductors were strong today, yeah. We'll be watching. I've always wondered for the last months who's going to come after NVIDIA and how much they do and how much they make. And there's talk. There's actual talk that others are having inroads. We'll see. Other names we're watching, Apple and Google off of that news. Not just really the news, but the reaction was pretty darn good. Alibaba. Certainly wasn't the earnings, but they said they had some sort of AI chip, and the market reacted well. We're going to be watching that in the weeks ahead. And just overall, not a ton of things breaking down as of yet. Wary of some areas, wary of some stocks, wary of some places, but interest rates coming down, and central banks are lowering rates. Big time. I heard 75 of them around the globe, and we're up next. And as we've repeated to you thousands of times, normally, if you're not going into a contraction or recession, lower rates won't hurt the market. If anything changes, we will let you know. Small caps, another good day. Drifting higher. Lower interest rates. Leave no doubt. There is your story. And we will be harping on them going forward. And we'll let you know if we get an audience with anybody in the administration. I will not use my title of Fox News business contributor. I'll just try to make some inroads and see if I can at least get to speak to somebody, because I can help. That all said, you have a great weekend. Drive carefully. When you get home, do like I do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Stay well. Be well. Until Monday. Have a good night. Bye-bye.